What is going on, guys? Nick here, back with another video. Well, Jerome Powell did it. Today he came out and said that the American economy is strong and well positioned to handle tighter monetary policy, which is great news because that means that the economy isn't just crumbling and falling apart because we've introduced all of these rate hikes. However, I think that also kind of hints that demand is a little bit higher than they had anticipated, and inflation may not wean off quite as easily as we had initially thought, which kind of makes sense when the consumer price index numbers came in a little higher than we expected last month. And while Jerome Powell had previously only anticipated a 50 basis point increase this month, he ended up going with a 75 basis point increase, which means that he's putting more into fighting inflation than he previously anticipated. Now, he also said that he anticipates rate hikes to go on as appropriate, which makes it seem like rate hikes are going to continue for the near future, and I don't really see that coming to an end until the numbers start to show that inflation is going to trend down to about 2%, which is the Fed's long-term goal, and I honestly still think that this is pretty far away. These rate hikes are going to cause a lot of economic pain, and the more resilient inflation remains, the longer all of these rate hikes are going to go on and the longer we're going to have to endure this economic pain. I would not be surprised at all if this ends up being a catalyst for a deeper stock sell-off. This is obviously really scary for a lot of businesses, especially those with lower profit margins who are going to be more sensitive to inflation, and those riding with high debt to equity ratios. Those companies already didn't have a lot of room to work with, and things are only going to become tougher. But I don't want to be a doomer because I honestly still think it is a fantastic time to buy stocks right now. Across the board, things have gotten very, very cheap. Unless you have a time horizon of only maybe the next 6 months, if you were to buy stocks at today's price and just continue to wait this out, I think you're going to end up doing extremely well for yourself. You're getting very good deals. And if stocks by some miracle do end up selling off another 30-40%, that is an even better deal because now you're going to get more stocks for even cheaper. Don't be the person who wants to rush in and buy stocks as they're going up and getting more expensive and then rush back out as soon as the price start to fall and things actually start to get cheaper and it becomes a good time to buy. Nobody ever looks at market crashes in hindsight and thinks, God, what a terrible time to invest. Now, the one thing that I think is still a total wild card in this situation is oil. The problem with oil is it's not as dependent on monetary policy for the prices to go up and down. It's really controlled simply by the supply and demand of oil. While the Fed might come out and drive interest rates up, it does not necessarily mean that oil is going to be impacted the same way as other consumer products, and the price of oil continuing to creep up is going to creep into the prices of everything else. To take that trip that you wanted to go on, the fuel cost for the airplane just went up. To ship those goods from the warehouse to the store, they also just got more expensive. For that farmer to run his tractor, that also gets more expensive. Oil price increases are something that you cannot just easily shake off. And I honestly think that this is still going to continue to be a very sticky situation, especially with oil refineries at nearly peak production at something like 90% across the board. About half of my audience apparently, at least according to these YouTube stats, is from the US. But weirdly enough, the numbers that I get don't add up anywhere near to 100%. So I'm going to guess that number is actually way higher and that I have an overwhelming majority of people from the US watching these videos. One thing I know about Americans is we really don't pay attention to news outside of the US. But I think something that is very important for us to understand with inflation and everything that's going to have to go into fighting inflation, this isn't just a US problem. Inflation is actually increasing all across the world right now. And I get that the US is the biggest economy and we probably influence a lot of that global inflation. My point though is that it's not just entirely the Fed's monetary policy that's driving all of these inflation numbers. I don't really think the Fed is the reason why the UK just saw its highest inflation numbers in the past 40 years at 9.1%. Canada just saw its highest around 7.7%. And again, I know that these are countries that are very tied to the US and their economies are certainly impacted a lot by us. And it seems like at least in the UK, what's driving their prices is they're starting to see a lot of food price increases. The Bank of England is actually reporting that by October, they expect inflation to hit 11%. So again, this inflation crisis that we're seeing in the US is not just constrained to the US. It is a global problem. So my point to all of this is to say that rate hikes are going to continue for the very near future. It seems like Jerome Powell basically confirmed that. Oh, hang on. So the stock market actually fell to end the day pretty significantly after Jerome Powell called the recession a possibility. and that really shouldn't be that surprising given what I've already been saying in this video. So that basically confirms what I have already been talking about in this video, that it's more likely than not that we're going to enter a recession. That wouldn't be that surprising to me, and it probably isn't for anybody watching this video. Keep in mind this quote that I like from Warren Buffett, but I honestly hate how people use it from time to time, that you need to be greedy when others are fearful and fearful when others are greedy. Right now, I think we're pretty much at max fear. Everybody's looking for that capitulation that may or may not happen. We're gonna have to wait and find out. But one thing that I expect is when we get the next Berkshire Hathaway earnings report, that we're probably not going to see Warren Buffett has unloaded a whole bunch out of fear that there might be mass capitulation in the stock market. No, what we're probably going to see is that he went on a massive spending spree and smoked through a whole bunch more of that $100 billion in cash that Berkshire has been sitting on. And quite honestly, if he's buying, I'm buying. So that is the video, and as always, thanks for watching. Oh, and if you're still watching, thank you, first off. I've clearly been trying to play around with a few different formats, trying to kind of figure out how to make this channel work a lot better. It's a little more newsy, and it doesn't really seem like people are that interested in me doing fundamental analysis on one random stock in a video. I also cannot put out the volume of videos to match other channels like Learn to Invest and Everything Money. It takes me hours and hours and hours to do those deep analysis videos. So I'm going to see how this format goes. Let me know what you guys think in the comments, and for real this time, thanks for watching.